What's up everybody and welcome to the video. And in this video, what we're going to be talking about is the power of dividend investing and how much of dividends actually take up of returns, and looking at the dividend snowball effect and why dividend reinvestment is so important and why it can take your portfolio to a whole nother level. So welcome to the channel. If you're new, this channel is Investors Intellect, where we talk about dividends, dividend income, passive investing, and I'm here to help you make as much gains in the market through a passive portfolio. I am currently in the process of building a dividend portfolio. These are just some of the holdings that I think will be going in there. Not all of them will be in it. I still have to do some trimming, still have to do a lot of research. We're going to be adding some more things into it, taking out a few of these companies. So if you are interested in that, make sure to subscribe to the channel. Whenever this comes out, it'll probably be a few more days to get all this research done, but I will post it. It's 100% free. I'll give you guys a link. It'll be amazing, but make sure to subscribe and turn on post notifications for the channel so you don't miss out on any future videos. But let's get into the video. So the first thing we're going to be looking at is this. I want to show you guys the upside potential that there is in dividend investing. Just look at this. 75% of S&P 500 returns come from dividends. That's from 1980 to 2019. This is your growth of $100 in the S&P 500 compared to with dividends reinvested and with dividends not reinvested. Look at your blue line, okay? Your $100 turns into roughly $1,800, we'll say. But your $100 with dividends reinvested, that turns into $5.3 thousand. That's a huge difference, okay? That's like 200%. Dividend reinvesting makes so much huge of a difference and can take your portfolio and give you a gap. We'll look on some calculations later, but the gap is so big. And the reason why I love reinvesting dividends is because of the simple fact that it's literally they're giving you money to invest. So usually you take money, you connect your bank account to your broker, and you deposit some money. Let's say you put in $1,000. Well, that's $1,000 of your hard-earned money. But whenever they're paying you a dividend, why would you not use it to buy more of the shares of a company, or reinvest it, or an ETF, or put it in another company? It's their hard-earned money, and they're handing it to you. Why don't you use that money to make more money? Looking on some more stuff, here's another example. Returns from the S&P 500 Toronto Stock Exchange Composite Index of 10,000 with reinvested dividends. This is over literally from 1976 to 2020. $638,000 with reinvested compared to non-reinvested, you only get $172,000. And it's not like they're giving you that huge of a difference, they're not giving you an extra $450,000 in dividends. It's just the fact that it's compounded and it keeps adding and adding and adding to your portfolio, giving you incredible gains in the market. Just look at the power of dividends. Dividend paying stocks have outperformed over time. Check this out. Your S&P 500 and Toronto Stock Exchange Composite Index performs by 6.10%. I believe the S&P 500 alone performs at about like 8% on a good year. Dividend payers perform at 9.10%, and dividend growers perform at 10.9%, which is incredible stuff to see. They also display lower volatility, which is sometimes what you want in your portfolio. So let's look on the next thing for these companies. Okay, dividends have made up 43.27% of the S&P's total return and 41.96% of the Dow's total return. To just get a clearer perspective, to put it in your mind, let's say that you invested $100 in Dow stocks on the last day of 1998. 1998 to 2008 was a very volatile time in the market, okay? You had the tech wreck, the dot-com bubble. And then you also had the financial crash in 2008, the real estate, everything just kind of went to crap. But by the end of 2008, based on share price appreciation alone, your $100 would only be worth $95.59. You would have lost money. You would be down 4.41%, okay? But if you include dividends, however, the total return would be $117.95, a nearly 18% profit on your investment, and a 22.36% jump point over price appreciation alone. That doesn't include reinvesting the dividends either. Imagine if you would be reinvesting those dividends. Your money would be growing far, far more. That is the importance of investing with dividends. Now, don't get me wrong. I love growth stocks. I have a portfolio for dividends And I also have a portfolio with some growth stocks with companies that I strongly believe in, and the upside potential I believe is there, and I don't plan on selling them anytime soon. But having a portfolio with dividends, getting that consistent cash flow, getting guaranteed returns, because these companies will pay dividends, and you never know in the event that a company, that the market will crash and your portfolio loses a ton of value, but you have dividends coming in to give you some value and bring intrinsic value into your portfolio. Now, let's do some calculations and actually show you the good stuff on why dividend investing and dividend reinvesting, the dividend snowball effect, is insane. So, let's say you started with $1,000. We're going to be going over two different numbers, looking at the difference between DRIP, which is dividend reinvestment plan. We're going to be looking at two different numbers. One number, this portfolio, which is a little bit more money, but we're going to use the same calculations, okay? And another portfolio with less money. So this is, you start with $1,000 invested, an annual contribution of $6,000. That's just $500 a month, okay? You have an annual dividend yield of 3%, an expected annual dividend increase of 2.5%. So every single year, the companies are raising their dividend payments by 2.5%, which is actually very conservative. And the expected annual share price appreciation per year of 5%. We're going to be very conservative on this because you never know what's really going to happen. And we can calculate this, and here is the numbers that we receive. Okay, you start with this portfolio at $7,000. That's year one. By the end of year one, your portfolio is worth $7,000. This is just the total value. Just see how it continues to increase, and then after about, I would say, year 16, the growth starts to get insane. You're increasing incredible amounts. By 40 years end, your portfolio is sitting at 3.1, pretty much $3.2 million. Your dividend income, it starts off a little bit low, $30, but then next year it's $220, $435, and it's great growth. This is incredible stuff. This is all with dividends reinvested, though. Remember that. Look at what your dividend income starts to become. It starts to be to where it can pay for all your expenses. It's $27,000, $36,000. Look how fast it's starting to grow. This is the difference between reinvesting your dividends. You'll end up having $227,000 in dividend income by year 40. Okay? This is your yield on cost. By the end of the time, 109% yield on cost. Do you know what that means? You're literally over doubling your actual investment from just the dividends alone every year, which is an incredible thing. Your average annual return is 30.58%. That also very highly contributes to having the dividends reinvested, because when we look at it without the dividends reinvested, your average annual return sits at about 5%. And we'll look at that in a second. Your total dividend payments over the 40 years was $1.65 million. Here is how much you actually invested. Okay, so annual contribution of $6,000. You do 6,000 times the 40 years, that's $240,000, okay? And then you got the extra $1,000 you started with. So you have $241,000 of your hard-earned money that you put into this portfolio. You literally made $1.6 million in dividends from that, which is insane. You grew your portfolio to $2.8 million. After drip value, $3.04 million. You're doing insane things with this portfolio right now. And that is the power of dividend reinvesting compared to, let's look at what it's like if you didn't reinvest those dividends and you took the exact same numbers, you just did not reinvest the dividends. You're investing the same amount of money, a total of $241,000. Your ending portfolio balance sits at $731,000, which is nothing bad. Like, that's a great portfolio, huge growth. You turned $240,000 into $731,000, which is incredible. But it's nothing like the $3.1 million that we saw on this portfolio right here. $3.188 million. That's a $2.4 million difference. Now, I know that I'd rather take my dividends. You literally hit a few buttons on these brokers now, and they're like, hey, we'll reinvest those dividends for you automatically. A machine will do it for you. And that's how I prefer my dividends to go. I'd rather them do it for me than me have to do it myself. It's simple. So we look on the more stuff. Dividend income, it'll be $55,000, $56,000 compared to the $227,000 that you were getting when you did reinvest those dividends. Your yield on cost is sitting at 25%. So it'll take about 4 years for you to make 100% back your yield on cost. You are missing out on an extra $1 million from dividend payments, and your average annual return is sitting at 5.09%. Your total return was 203%. The total return on the other portfolio was 1,223%, which is a huge, huge difference. Okay, you can see how much you'll make in dividend income. You start with 30, then 246, a lot lower than the other portfolio. This is total cumulative dividends. Annual dividends, it gets a lot lower. It does not grow to be as big as when you reinvest. Now let's do it with another portfolio and see what those numbers look like. You start with $100, annual contribution of $1,200, which is $100 every single month. Same exact calculations, same exact annual share price, same exact dividend yield, 40 years invested. Let's see how this ends up. Your portfolio will end up sitting at $632,000 with dividends reinvested. Now, you take this number, 1,200 is your annual contribution, you multiply that by 40, and that gives you a whopping $48,000. Plus the 100, so $48,100. You turn that into $632,000. That's incredible returns. You only invested $48,100. Now your dividend income is $45,000. That's a lot of money. From just dividends alone, your yield on cost, what is it sitting at? 109%. It's the same calculations. 1,215% is your total return. Your average annual return sits at 30.4%, and your annual dividend income the next year is going to increase to $52,000. This is incredible stuff. Here's your annual dividends. $3 the first year, then you got $40 the next, $83, and it starts to increase. Let's go do this calculation on a no dividend reinvestment, okay? Let's calculate how much you make. Your portfolio at the end of 40 years is only sitting at $145,000, which is a lot of money, don't get me wrong. But it's nothing compared to whenever you reinvest your dividends. Literally, your total return is 202% over 40 years, which is decent. You can always do better because your average annual return is only sitting at 5.07%. The only difference in between these portfolios and the difference in between making an extra 25% per year is reinvesting your dividends. It's huge. The dividend snowball effect is insane. And you can just see your yield on cost sits at only 25%, which is a great yield on cost, don't get me wrong. But if you reinvest those dividends, your yield on cost will be 109%. You'll be sitting like Warren Buffett. Warren Buffett is doubling his dividends on an annual basis. It's insane stuff. Your dividend income will be sitting at $11,000, which it's a good amount of money, but it's nothing compared to what you're seeing with everything else, with whenever you do reinvest those dividends. But guys, that is what I have for you in this video. If you did enjoy it, make sure to give this one a thumbs up, and you subscribe. You turn on post notifications for videos about passive income, dividends, dividend investing. I always want to share as much as I can. Once I get everything transferred to M1 Finance from Fidelity and TD Ameritrade, I'm going to have my portfolio, and I'm going to be as fully transparent as I possibly can, showing you guys the portfolio that I use, sharing it with you, helping you make the best gains in the market over the long term. And thank you so much for making it to end this video, and I'll see you at the next one.